Well, what's going on, guys? Welcome back for another episode here on Let It Grow Investing. I'm Jeff, and thank you very much for stopping by. We've got, a lot of chaos out there in the market, as we've been seeing for a while. We've got a lot of volatility. We've got a lot of problems. We got some tariffs that aren't going our way. We got, or maybe not even not going our way, but they're getting changed, right? They're going into more uncertainty, which has just been a tennis match of back and forth that we just can't keep our eyes up with. We can't keep our mind up with how quick this thing is moving. So that is definitely something that we are watching. We are watching earnings news. We're watching crypto a little bit, right? Ethereum's kind of clawing its way back up. Man, we're finishing out May. We are looking at just what the market is doing there and how all the tariff talk has really been impacting all of our money decisions. So we're going to go ahead and get right into it. If you're new here, please make sure you like, subscribe, and follow. Definitely does help the channel, and would definitely appreciate that. So we're going to roll right into what the S&P 500 is doing over the past month, right? We are definitely seeing a rise here. We are looking at some decent move higher. We were started the month down here at around 5,600-ish. Now we're sitting right around 5,912. Where was this one? Is it going to pop up on my chart here? It doesn't want to show me, but yeah, 5,600 roughly in line over here. So yeah, definitely a nice move higher. That came after a really tumultuous, tough April, right? We really did not have a great April. We can see it here on this chart, right? This is when all this tariff news started coming out. Doge started kind of coming out, rolling out all those problems. And a lot of uncertainty in this time. So, I guess hats off to you if you were brave enough to dive in off this high dive right here. When we were at 5,600, we just went down. If we were buying it, you were able to buy into the S&P around that 5,000 mark. Man, you're making some money now. We're in that month time frame, month and a half, give or take. We are up significantly. Definitely a lot to talk about there. A lot of volatility, like I said. And then, what is really going on? Let me go ahead and share this one. This is from Yahoo Finance. If you guys don't see it, if you're not watching. How Trump's tariffs turned the taco trade into Wall Street's biggest debate. Taco trade, I had to look it up myself. Trump always chickens out. That is what a lot of investors are saying right now when it comes to tariffs. He's talking this big game, kind of backpedaling and maybe not following through, trying to get people to the table. But hey, yeah, we're going to lower it here. We're going to do this. We're going to have a pause. We're going to whatever. So it's becoming the taco trade. And how is that affecting everyone? It's also affecting Europe, right? Europe was seeing a rally on the fact that a lot of the trade tariffs aren't really going his way. It got overruled by I forget the court that it was overruled in, but the Trump White House secretary saying, don't worry, the Trump tariffs are going to be back. We're not going to stop this thing just because a court said something. We're going to appeal. We're going to get it done. But it's really a lot of growing concern, frustration, confusion as to just what is going on, right? It really is a tough playbook to follow. We don't really know which way this thing's going to go. Is it going to be tariffs? Is it going to be somewhere in the middle? Is it going to be overruled? What's happening, right? So we've got a lot of different concerns, a lot of different unknowns. And, that brings a lot of confusion to the market. And we've seen that, right? So we got the acronym, Trump always chickens out. Growing belief that among investors, the president talks tough on tariffs, but rarely follows through. So we've got that is a big concern right now. It's also the reason that the S&P and the NASDAQ, well, the NASDAQ was up about 10% on the month. I think the S&P was about 5%, I want to say it was. Let's go ahead and pull up the NASDAQ real quick. I'll take a look at that one. NASDAQ year to date, that's probably an ugly looking chart. But if we look at this 1 month, you will see that we had this, pretty decent rise here, down near 17.5 up to about 19.1 right now, 19,000. So yeah, definitely some stuff moving around over there. NVIDIA did have that earnings report. I did want to pull that up. I will hop over to this screen. So yeah, NVIDIA, better than expected earnings and revenue on Wednesday, right? So data center business. We've been talking about data center. Anyone that is in data center right now is really seeing a meteoric rise of the amount of business that they're doing, right? We are all going all in on data centers. We've been talking about AI data centers as well, right? People are building those out. We were talking about how nuclear was kind of coming into the chat last week with Trump kind of pushing some nuclear programs, pushing those along. So NVIDIA, growth of their data center business, 73% year over year. That is massive. This is not some small company. This is, the biggest out there. So 73% in data center is massive. Stock rose about 6% in extended trading. EPS, 96 cents adjusted versus 93 cents expected. Revenue, 44 billion, 44.06 billion if you want to get technical, 43.31 expected. So we beat on both numbers. NVIDIA is also saying that they expect about 45 billion in sales in the current quarter versus estimates of about 45.9 billion in the July quarter. Company said its guidance would have been higher, right? This is where that tariff talk comes back in, or not even tariff, but trade agreements with China. We can't go ahead and sell these NVIDIA top-end chips to China. So that cost NVIDIA about $8 billion, right? And I believe that is just in the quarter. That is a massive number, but somehow they're still outperforming. So the U.S. government informed NVIDIA that its previously approved H2O processor for China would require an export license. It incurred a $4.5 billion in charges related to excess inventory for the chip and would have recorded $2.5 billion in extra sales if the chip hadn't been restricted. So remind you, this was supposed to be looking like it was going to be a potential miss, right? That's why I said last time that we were kind of in this no man's land of where NVIDIA was going, right? We weren't really testing those lows. We weren't really in this euphoric rise where the NASDAQ was going. We were kind of in this no man's land of sitting in the 120 type range. And a lot of people weren't really sure what's going on there. I've been on the side of I'm a NVIDIA bull, meaning that I expect this thing to go higher. I'm still an NVIDIA bull. The PE sitting at 44.8 on the trailing 12 is, it's probably a bit high. We can say that it's probably a bit high. But then if I look at forward earnings, I'm going to go ahead and share this one. If we're looking at forward earnings on NVIDIA, right now it comes down from this 47.4 down to a 32.2. So a lot more manageable. I can wrap my head around a 32 handle on a forward PE for a company like NVIDIA. They, are worth about 3.2 trillion right now. We're sitting at 139. We're starting to get back up to some of those highs that we've saw. Man, it's been a while. Was it February? It's been a while. So we're looking at that, right? We've got 5-year return, a small 1,468% if you've been in this one for any kind of time. We can look at all the comparables. That's not really why I'm here. We had some downgrades, right? We did have downgrades because people were concerned about that loss from not being able to sell to China. So we still have around 23% of upside from 51 different analysts, average price point being 172. Someone is saying they're going to 373. That's pretty outlandish on a 12-month. I'm not going to lie. That is a triple for NVIDIA. I mean, maybe not quite triple, but it's pretty close. And 12 months is pretty unheard of. That would value this thing at about $9.23 trillion. I'd have to do the math. I'm not sitting at a calculator at the moment, but we could do that math ourselves, right? So annual revenue for 26, we are still looking at this company to grow 53% by the end of 2026, 92% of growth on NVIDIA's revenue by the end of 2027, right? So this is not stopping. Yes, there's some bumps in the road when it comes to China, but we're seeing the data center sales rise, right? So that is still a huge growth driver that really needs to be built out as we build out more AI. We're still seeing more NVIDIA chips getting pushed into these centers. We're seeing Amazon say the same thing. They're buying more NVIDIA chips. We're seeing, was it Meta? I think it might have been Meta that was said the same thing. Oh, no, it was Tesla. It was Tesla that said they are building out more data centers with NVIDIA chips as well. I think that was last week or 2 weeks ago. So I still think that the trend is your friend when it comes to NVIDIA. I still believe that we've got a stock that we can, probably invest in on the dips. I'm not saying buy it at the peak, but I do believe that if you wanted to buy a little bit now and a little bit in a couple months, if things start to trend back down, I think that could work for you. I'm not saying it's going to triple. I don't think that that's going to be the case, but I definitely think that we could see 20, 25% in the next 18 to 20 months. I definitely think that that's a realistic growth driver, given the amount of revenue that we're looking to add, right? The 53% by the end of 26, 92% by the end of 27. So if we see any of that revenue make it through to the bottom line, not spending as much on CapEx, and we're starting to see it actually affect the earnings, I do believe that we're going to see some real growth still to be had from NVIDIA. And I think we're going to outpace those highs that we saw previously. Like I said, maybe it was February, maybe it wasn't, but that's my 2 cents there. So we are still with this PE at a forward PE of a 32. We are at a 23% discount to where they historically trade. This is their 5-year average right now at a 42, and we're trading only at a 32. So 23% discount. Yes, you're paying more than other stocks in the S&P, but you're also getting a stock that has returned 1,468% over 5 years. That is massive. Other stocks in the S&P have not done that. Yes, there's probably a few. I know that they're out there, but overall, the average is not 1,400% over 5 years. So again, you're paying more for something like an NVIDIA, but you're getting a lot more in gains, right? Not everyone can up their revenue. Being a $3 trillion company, they can't simply just flip a switch and make, 53% more revenue next year. It's just very unheard of. So yeah, we've got price to sales. That is steep. That is steep. I would like to see that number lower, probably down near that 19, preferably much less than a 19. But yeah, I mean, as you see, the S&P 500 index average on price to sales is 2.9. So this part is scary. I get that, but this forward PE does not bother me. And yes, NVIDIA does trade with a high price to sales normally, right? So it's very common for them to trade at this high number, but not everyone likes that. Not everyone wants to go ahead and get in on that front. So forward PEG ratio. This is probably one of my favorite ways to value a company, right? We're looking at what do I get? That's the G, that's the growth based on this forward PEG ratio. So our growth is outpacing our price earnings. So 5-year average being a 1.5, that's actually fairly cheap when it comes to the S&P 500, which normally trades at a 1.9. Now you're looking at the forward PE divided by the 5-year forecasted growth rate. So the growth rate is going to be the thing that's keeping this low, is that it's growing so fast, so that denominator is going to affect what that actual growth rate means. So the cheaper we're going to see a PEG ratio, essentially the better value you're getting on an investment, right? So there's definitely things that could kind of skew that, but normally speaking, a cheaper PEG ratio means we're not paying as much for the growth as the current price earnings multiple. So definitely some things to take into account there when you're looking at a stock. We're looking at all these on a lot of the stocks that I get into. But yeah, that's a kind of a long and short of what NVIDIA is doing right now, and then kind of where we go. We're going to take a look at another one that we were watching this week, and I'm going to try to pull it up before I swap over. And that name was going to be Costco. I do want to take a look here at some of these articles that we were just, I was just peeking at. Let me see if I can't get this one. There we go. Costco wholesale advances 3.1, outperforms competitors. So Costco is up, right? This was on Friday, 3.1% higher. Now above 1,000 a share again, right? We're up 31 just on Friday alone. So we've got, yes, it was a bit mixed on Friday, but overall, Costco did pretty well, right? So we closed 3.5% short of its 52-week high. I do think we could, get back up to that as well. Outperform the competitors, Amazon, Walmart, Target. Trading volume totaled around 5.4 million. This is not the article that I wanted. And I know it had some different numbers in there as far as, let's go ahead with this one. This is probably a better way to go. Let's see what we can't get on Yahoo Finance. Costco has a big price tag. Some investors are eyeing a rare split. So we might get a stock split. I'm not too sure if that's actually baked in at this point or going to happen, but some people are looking for it. So CFO Gary Millerchip in December said that making the shares comparatively cheap is less useful to investors now than in years past because of the availability of fractional shares, right? So if you're looking to invest in fractional shares, use my link in the description to get into webull, and you can buy fractional shares over there. That is very helpful. I put the $200 in, right? I can buy a fifth of a Costco share with my $200, right? So again, I was saying that normally last week we were talking how Costco tends to trade down after earnings, but this one was actually trading higher, which is a rare thing for them, right? So on a straightforward price per share in the among the most expensive based on price per share. Okay. Friday around 1,040 was one of a dozen with a 4-digit share price, right? And we've got NVR ended the week above 7,000. A rise of roughly 25% over the last 12 months. And now there's renewed chatter about whether the company might choose to split the stock, right? So we might, I don't know if we'll see a 10-1 or not. We could, right? And get it back down to around $104. That could make some people a little bit more interested in it, right? So we've got bullish rating still at 1,130. Guys, I just wanted the actual earnings here. We're not getting so much on the actual earnings, but it had to be pretty good, I'm guessing, if we are able to go ahead and take off, right? So they turned in at a strong quarter. They are navigating tariff uncertainty, as we all are. Companies' investments in improving the customer experience appear to be paying off. Continues to benefit from last fall's membership price hike. So that was marginal, but I'm sure it does go a long way when you multiply it over all of the members that they have. Up 13% year to date, 235% over the last five years. And we got another strong quarter. Here we go. We've got tariffs pose a significant challenge. We understand that. We've got quarterly revenue rising 8% to $63.1 billion. Adjusted EPS increasing 13% to 4. So a double-digit rise on EPS. That is going to drive that thing. That does definitely make sense. We've got the price hikes on memberships going up, and people are repaying or paying those, right? They're re-enrolling for their membership, so that is definitely helping. We've got that revenue is growing, right? That is definitely good to see. And I know it's going to be this tariff battle, right? But if we're actually seeing tariffs kind of come off the table in some spots or have a little bit more clarity, it does start to make more sense. So a lot of things went well for them, right? We're also seeing same-store sales rising around 8% when adjusting for changes in gasoline prices. Same-store sales jumped 7.9% adjusted. Canadian comparables climbed 7.8% adjusted. So we've got gas costs coming down a bit, and now they're adjusting for that into their actual same-store sales, as they are a big seller of gasoline in the U.S., I know. So that is there. But yeah, now where do we go from here, right? We've got a lot of this tariff uncertainty that we are looking at, right? We are looking here, and I'm trying to pull this up at the same time. We've got tariffs are not going away, Trump's Commerce Secretary says, right? So this, they emphasize that the 90-day pause for tariff negotiations is a hard deadline and vowed that despite a federal court ruling earlier this week, tariffs are not going away. I don't see today that an extension is coming. In fact, I think that's the deadline, and the president's just going to determine what rates people have. If they can't get a deal done, President Trump is going to determine what deal is going to be. Lutnick said during an appearance on Fox News Sunday with Shannon Bream. So yeah, do we just see him just impose this number? You didn't come to the table. You had this amount of time. It's not happening. So here you go. Here's 25%. Maybe, right? Maybe we do see that. Maybe we see what this court ruling is, and if they can find a way around it, Lutnick also weighed in on last week's court ruling blocking tariffs that Trump imposed using emergency powers, which that is the big gripe, is that what emergency? The administration appealed the decision, and an appeals court ruled that the tariffs can remain in effect while the case is being heard. The president claimed on Truth Social today that a ruling against them would mean economic ruination for the country and allow other nations to take advantage of the U.S. So maybe that's the angle that he's saying on the actual emergency, is that we're being taken advantage of, and maybe we're kind of pushing it through like that. It's going to go to higher courts. President's going to win. This is, obviously his secretary, like he always does. But rest assured, tariffs are not going away. He has so many other authorities that even in the weird and unusual circumstance where this was taken away, we just bring on another or another or another. So they're going to find a way to get around whatever ruling. They're going to find another way to push these tariffs through and get it done, right? So yeah, Musk, he is now leaving Doge, right? I think that was a short-term position that that Musk had with Doge, and now he is officially out. So he's going back to Tesla. We will see what that means there. We're going to check in on Tesla real quick, as they are focusing more and more back to Elon, to try to see what's going on here. So we're going to go ahead and pull this one up. We've got this 1 month chart, with Tesla down here, 275. We were probably year to date, I think we hit like 230, 240. And yeah, I mean, this volatility out of Tesla, it's unheard of for some companies this large to be this volatile. Very high on this price earnings multiple. I kind of want to take a look here at just what Refinitiv says. We're going to share this tab real quick. So it is a hold. 5-year return, 544%. 1 year is 100. We've got 4 upgrades, 4 downgrades, minus 19% on this price target, average being 289. You can pause if you need to take a look at any of these charts. So some of these earnings look like we're seeing a little bit of drop in 25 and potentially seeing a rise back up for 26. Same thing here, right? This 24 quarter, December, was much higher, seeing a drop in Q1 as, Trump entered the Doge program, and a lot of things came down. Big surprise on the downside for the April quarter, right? We're starting to see annual revenue come back up for 26. But man, 25 is looking rough here. So, like I said, I kind of cut my losses before. I cut and ran before this thing kind of came back below where I bought in. So I got out while I was still ahead, and I nibbled back in a couple places, but not the position that I did have. So I'm still concerned about a couple things here. I don't know if people go back to this. I don't know if Trump is going to push people away from EVs. It doesn't really seem like everyone's going EV by 2035 that we were talking about maybe this time last year is still a real situation, or if that's just kind of a pipe dream at this point. So I don't really know what happens for Tesla. I think that the data and the fact that they're trying to license full self-drive could be a huge driver of growth for them. I think that could be something that they lean on heavily. But I don't know that I want to buy into this thing at the moment, right? This forward PE sitting at a 169 compared to their 5-year average of a 79. That's also because this PE is so high. The growth is so low, right? The growth being, lack of growth there, right? Forecasted growth of minus, but granted, this forward, the PEG ratio is a 5-year forecasted growth rate. So there is some growth that just might not be in this year. So we're taking that average, we're dividing it out, and it's still a very, very high number when we come down to this PEG ratio. I'm sure, right? Let's take a look. Yeah, so we're at a forward PEG of a 16.8, which is not something I'm really chomping at the bit to get into, right? That is not really where I want to be investing. 5-year average being a 3.1, so we're 5+ times higher than where it historically trades. And again, that S&P 500 average is at a 1.9, and NVIDIA was at a 0.7. So if I'm buying one, I'd much rather be into an NVIDIA rather than a Tesla at a 16 times multiple. with a forward PE of 169. Yes, the price to sales is cheaper than what NVIDIA is, but it's still not something that I'm really itching to get into right now. I think I'd probably rather buy Uber at the moment, to be honest. And I don't know that I've really ever said that. So it's I don't know that it's the all clear, right? I don't think we're in the clear on Tesla. So for me, I have a couple shares. I'm not, really chomping at the bit to get right back into it. I don't know if it's the time or place to do it. We had a huge rise with, Elon getting out of Doge, but I still don't know that we're in a spot where EVs are just going to dominate right now. I think a lot of people have a bad taste in their mouth about Tesla. Not everyone's on board going EV, and I don't think that Trump is either. So I'm not too sure what the drivers here are. Yes, it could be full self-drive or robo taxis or whatever, but I'm not too sure the timeline on that. I'd have to do a lot more digging to know that for sure. So yeah, that's what I'm looking at there. We've got Broadcom coming out this week, I believe it was. I'm still watching that. We bought, Broadcom is going to be Thursday. We've got them sitting at a 242. I had a covered call expire on Broadcom that I had wrote when it was at 225, and I had a strike price of 260, so I held on to my shares there. I didn't really see too much upside, right? I'm looking at this. I don't think it was going to go to 260, so I got the premium for writing the covered call, and was able to keep my shares. Same thing with Palantir. I did the same thing at a 135 on Palantir, and I was able to keep my shares there as well. So I have a couple covered calls written that I'm just trying to collect some premiums on. I'm really not trying to sell any shares. I just want to get some more in the way of earnings coming in, take that, reinvest that money elsewhere. So that is what I'm doing, right? So we are looking at stocks for this week. Where do we want to be? And where do we want to be spending that money? We were looking at Eli Lilly this past week. I still think it's a good stock, right? I still think that is a lot of upside. They have a solid pipeline. They are beating Novo Nordisk. Novo's market share has kind of crumbled, and I think that Eli Lilly could be a great stock to add, right? So I added $200 of my own money into the investing challenge for Let It Grow. I was buying a couple other things, right? Not to get sidetracked, but I know I bought a little bit of Nike. I think with the new CEO returning, I think it was a chairman, maybe a previous CEO. I know he's kind of coming back in. I know direct to consumer was a big problem. The deals with Dick's and Foot Locker kind of had things a little choppy, but they also were losing market share because they were pushing direct to consumer so heavily, and it was not working, right? They needed to be in the stores and they weren't there. So the fact that things are kind of getting a little bit shaken back up, we're going to see some changes being made here. I don't think this is going to run away in the next 6 months, right? I don't think it's going to be by the end of the year, but I do want to be in this position when it does start to roll back higher. So I really think that Nike should start to see some more growth. I think we're out of a lot of the different the things that they were kind of pushing to get into, the woke culture. And now it really seems like they're focused on football, basketball, running, and probably like the athleisure wear. So I think that's probably a good spot for them to be and try to crowd out some of the competition, right? They definitely were battling up against, a lot of people getting into the space with Lululemon, Viore. You got, the other big names, Adidas and Reebok that are trying to work in there. You've also got On Holdings that was pushing them out of the way as well. And it's just a lot of different competition that they were kind of letting the door open, leaving it open. And now they're getting back on Amazon. Nike's going to be selling on Amazon again, first time since 2009. So I think there's a different angle here, right? I think that we're making some changes, and I kind of want to be there for the turnaround. I don't think that Nike being at 60 is going to last forever. This thing was 170 probably back in the COVID days. It might have been 21 or 22, but it had got up there. And where is my 5-year? That I clicked 5-year. Where are we at? This is not the chart I want. Let me go ahead and get rid of the simple moving averages. Let's just see if we can. I don't know why this is not pulling up for us, guys. Oh, there we go. 167. What did I say? 170? So yeah, very, very close. Oh, we did hit 179. So yeah, this thing, man, I don't think it's going to be down here forever. I think the fact that we're identifying the problems and we're changing them, and we have some management changes, I think that this thing could definitely go higher. So I don't want to miss that. We have a lot of tariff uncertainty still, so I don't think that this is going to run immediately, right? Until we get a lot of clarity. And that is not, oh, sorry, guys. I was not sharing this screen. There we go. Let me go ahead and share this thing. We're going to, is that the right one? Nope. That's the right one. Let's go ahead back to it. So yeah, this is the 10-year. This is where, Nike was November 2021. And here we are now, right? There was a lot of different problems from here to there. And I really hope that we can, kind of round this corner and get back up into some positive territory, because they've been, out of it for a while now. And I think it could be a good time to get back into this one. Not what I'm buying this week, just kind of a sidebar as to what I'm looking at. Boy, we're going through them again, right? We've got NVIDIA. We've got Tesla. I don't want Tesla. NVIDIA still with about 27% of upside. I really still like Eli Lilly. I really think that's probably one of our best picks we could be looking at right now. Meta, not much in the way of upside. 650, we were down near 500. I don't think that's the one that we want to dive into right now. Amazon, man, I'm still bullish there. I'm definitely bullish there. I really like Amazon as well. Eli Lilly, we've talked about quite a bit. Next era, a little bit of upside. I like utilities, but I'm not playing that defensive right now. I think next era, and most of the utilities are definitely a defensive play. So that's not maybe where I want to be. I know a lot of them that are tied to nuclear are rolling up a good bit, but maybe not the exact way that I want to play it. CrowdStrike, did we get earnings out of them? 471, man. Oh, kind of makes me sick that I wasn't buying when I was selling. But nevertheless, yeah, their earnings are Wednesday. So we will see what happens over there at CrowdStrike. We will maybe get a chance to jump back into this one now that it's at this high. After all these internet outage woes that they had in 24, man, this thing cratered. And maybe that was the time to buy it. But I was definitely concerned about the lawsuits and everyone that was coming for them. And man, I guess they just shook all them off like no big deal, because that is a huge turnaround, right? From 200 to 474. And then you got one analyst saying that NVIDIA is going to do even more than that. So I don't know, guys. I don't think that CrowdStrike has that much room to run. I really can't see that it would have that much. I really can't. I mean, someone's saying 545, but I don't want to be in it for that downfall if things do go awry on the 3rd, right? So that's not where I want to be. Costco, yeah, we just reported. We saw some good things. I think it might have been a little too much too fast. I don't know that I want to chase this one right now. So where does that leave us? We got AMD. What is AMD looking like? AMD, we're sitting at 110. Average price target of 126. I like AMD. I have a big enough position there. I have a big enough position in NVIDIA also. I guess it's for the investing challenge, not for my portfolio. So what would I be buying if I had to buy something right now? I think it's between Eli Lilly, Amazon, and NVIDIA. And I don't have a 3-sided coin with me. So NVIDIA's got that cheap peg ratio, which I really like. Amazon, let's pull up Amazon. Let's go through them. It's been a while since I've actually gone back and forth and looked at all of these kind of side by side and really compared them, right? So we are looking at Refinitiv. Let's go ahead and share this one. We are looking at a price with a forward PE of around 33. That is where we are at for Amazon, which is right where NVIDIA was. We've got a 5-year return that does not look as good as NVIDIA's, but that's in the past. That's not current. Buy ratings. Let's get down to this peg ratio and the growth. Let's take a look at the growth. This does not look great. We are looking at a downfall there and then potentially coming back up. Although it does look okay for this chart, right? So we're seeing a little bit of growth on earnings per share. Annual revenue 8%, annual revenue of 19%. So this is for 25, this is for 26. And remind you, NVIDIA was at 50 some percent for 26 and 93% by 2027. So on those metrics, I would have to say that NVIDIA looks better. Now, if we get down here, we are at a deeper discount on forward for Amazon. So maybe we're getting this at a bit better of a forward entry point. The trailing PE has cratered. So maybe that could be a good sign. Forward PEG ratio is a bit of a decline. I'd have to look at why this has come down so much. Price to sales is right on point. Oh, this is trailing. Sorry. Still a decline, right? 33 to 61. Man, that's a tough call. I do like the growth of NVIDIA more. Both of them have a lot of things to be excited about, right? I mean, AI, web services, data center. There's a lot of growth in both of them. If you're looking at tariffs, I think that NVIDIA is going to have a better time there. But if you're looking at them being blocked out of China, NVIDIA is going to have a tougher time. So that's kind of a toss-up. So I guess I'm looking at growth there. And what was the other one that we said? Eli Lilly. Man, I think we've kind of looked at Eli Lilly pretty in depth here lately. So I'll take a look real quick, just out of curiosity's sake. We'll take a look. Are we sharing this one? No, I'm not. Let's go back and share Eli Lilly. I think it should be this one. There we are. We've got 5-year return of 372%. We've got a stock that is about 34% of upside, right? So we've got some good growth there. This is some solid staircase here. Look at this growth from 12.9 to average of 21 to up to an average of 29. That is some solid EPS gains. We've got annual revenue going up for 32%, annual revenue growing up to 57% by the end of 26. That's right where NVIDIA was. Granted, this is a cumulative over those 2 years. But I do like that, man. I really, really like Eli Lilly right now. Little bit of a dividend, more than NVIDIA, more than Amazon. So we've got some things going well for them there. They are still at a discount, right? So I do think with that growth and trading at a discount on forward PE, man, I really like this stock. Forward PEG ratio is also 0.7. Oh, man, I think do I buy Eli Lilly back to back? That's a tough one. I really like this stock right now, guys. I really do. Man, it's been a while since I bought NVIDIA. I'm going to go with NVIDIA for the sake that I haven't bought it in a while. I don't necessarily like buying at a peak. Oh, man, I don't like buying at a peak, but I think that it's still a good stock. I really do like Eli Lilly, though. This is some good entry point here for Eli Lilly. If you're not in it, take a look. Don't just judge. Don't take my word for it. We are at a discount on forward. We are at a discount on the forward PEG. We are looking at really solid growth. We've got a dividend grower that just raised over the past year 15%. A lot of things are going their way, and they are really looking to grow this thing. So, man, I'm going to buy NVIDIA. I'll say it now. I'll buy NVIDIA, but I would definitely urge you guys to look at what Eli Lilly is doing right now. So that's all the time that I got for you guys. So thank you very much for stopping by. I think I will be buying that $200 worth of NVIDIA around lunchtime tomorrow on Monday. And thank you guys for stopping by. Please make sure you like, subscribe, and share. And I would definitely appreciate any kind of support that you can give. So thank you very much, and I will talk to you next time. Take care.